The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today are analysts Mickey Mordick. G'day, Mickey.
Thanks, Gaurav.
And with us also is James Carlisle. Hey, James.
Hey.
Gents, let's get straight into it. Mickey, you published an article on advanced nanotech. And when you pitched the idea originally, I must say, my first reaction was, why the heck are we writing about this thing? All I'd heard was controversial shenanigans from management. They sound awful, the guys running this company. I didn't want anything to do with it at any stage, yet you wrote it up anyway, and it ended up sounding kind of interesting. Tell us firstly how you came to this stock and why you stubbornly pursued it, even though some of us thought it was awful from day one.
Oh no, well, I don't know if I think I may have sprung it on everybody at the very last minute and just said I'm publishing this. So I don't think I gave anybody a chance to object. But I
think I did loudly object though.
I just came across it, on the internet of all places. So I can't remember. I've seen it around on Twitter or on Facebook. No, not Facebook. Just around. So I decided
Twitter.
to
The source
take
of all great investment ideas.
Yeah. So had a look at it. There is a little bit of controversy. I think I wouldn't categorize management as necessarily in a negative light. I think they've done a fantastic job. In particular, Lev Mizakovsky, so I better go back quickly and kind of explain what the business does. But so that's kind of how I came to the idea. I guess was just kind of around. It's on Twitter a lot. There's a lot of small cap investors that are interested in this business, so just decided to take a quick look at it. And the business basically it has a technology that can produce nanoparticles of a very specific size and shape. And so their main product at the moment is Zinc-Clear, and Zinc-Clear is a zinc oxide nano powder, and so the nano powder is essentially, it's one of the safest ways that you can protect from sun exposure, and there's currently kind of reviews into other kinds of chemicals, I guess, in sunscreen that potentially could see some of the banned, and so. The
Can I ask you
narrative
a question? Sorry,
yeah.
continue. Go. No, finish with the narrative, and I'll ask you a question.
Yeah. And so the narrative is basically for the bulls is that, people are shying away from chemical-based sunscreens, and, the future is going to be zinc oxide sunscreens. And these guys, have the patented process for making it cheaper and better and higher quality than anybody else. So, they'll capture the market and make lots and lots of money, basically.
So I think, the old style, and you had a picture, fantastic picture. Everyone's got to go and have a look at it, of Warney with sunburn all over his cheeks and this sort of thin stripe of white on his lips. And the old style zinc basically had large. This is how I'm understanding it. Tell me if I'm wrong. It had large lumps of zinc in it, which caused it to look white. And protected you from the sun. Whereas this had the nanoparticles. The point of that is that the little bits of zinc oxide are so small that they still protect you from the sun, but they don't look white on your face. Is that how it works?
Yeah, that's exactly it. Yeah, I mean, the zinc normally sticks together, and so you get these big clumps. It's kind of like a paste normally, and so the problem that they solved was basically putting it in a solution that, where it wouldn't clump together, and you can rub it onto your skin, and it would come out transparent.
But either way, it doesn't get absorbed, which is where the risks may or may not come with the chemical based, which the chemical based typical ones get absorbed into your skin.
Correct. Yeah. So that's right. Yeah. So
I wasn't aware of that. That's something that I learned from your review, Mickey. That sunscreen is a cocktail of chemicals. I always thought it was a physical block. You get this thick cream. I thought that was like a physical block. I didn't realize there was chemicals actually preventing sun absorption.
Yeah, well, it's one of those things, and I guess just the shock of finding that out as well is enough to make you think twice about putting it on your skin
No,
next
I
time.
grant you that. I think that's true. Yeah.
So, regardless of what these reviews come out with, so I mean, the FDA, for example, now is actually, after finding out that the sunscreen chemicals enter your bloodstream after you rub it into your skin,
Mm.
they're actually doing a review, and they've already found out of the 14 active ingredients in sunscreen, 2 of them are actually unsafe,
Mm.
and the remaining 12 they just don't know yet. So that's why they're doing this
They've
review.
actually found them to be unsafe as opposed to not finding them to be safe.
So I think two are not generally recognized as safe. So it doesn't maybe necessarily mean that it's unsafe, but
You've
maybe
said
not
they find
recognized as
in
safe.
the review. I'm just looking at a review. They say that several of the most common active ingredients enter the bloodstream at unsafe concentrations. So that's, I suppose, the point, isn't it?
Yeah. Well, I mean, yeah. So and they haven't been thoroughly tested. So which is so basically when the FDA took over control of sunscreens, they were kind of the sunscreens chemicals were kind of grandfathered in, so they didn't have to go through the same checks as most things do today, and so now they're finally coming back to them and going, well, maybe we need to test them,
Mm.
and it's not just their effect on humans; it's also the effect on the environment. There's, for example, Hawaii and I think some Pacific nations have actually banned some chemicals because they've been implicated in coral bleaching, and so that's not very good for the coral.
I think the advice from the WHO is still that even though there is some question mark about traditional sunscreen, it's still better to wear it than not wear it, right, Mickey?
Yeah, I mean, this is the funny thing. I mean, this is kind of a side point, which I found interesting just reading about sunscreen. Was that incidents of skin cancer have actually increased since sunscreen came in because people are more confident going out in the sun now. And
Mm.
so they think they can put on all this sunscreen, go out in the sun, and you'll be fine. So your best defense is just not going in the sun too much. But if you are going to be spending time in the sun, then yeah, I mean, it definitely will cut down on skin cancer. It's just maybe there's other ways of doing it that are going to be potentially safer.
Mm.
So
I think to Gaura's point though, the advice definitely still is that you should wear sun cream
Yeah. I
rather
mean, we
oh
don't want
yeah,
to be, yeah.
than.
absolutely, yeah.
Yeah.
I mean, I'm not a doctor, obviously, but I'm just trying to relay what everyone else has said. But yeah, I think the standard advice would be that not wearing sunscreen would be more dangerous. So yeah, so I think the thing is with the sunscreen that if you're the reality is most people aren't rubbing liters of this onto their skin every day either. So unless you're spending, most people go to the beach maybe a few times a year and you're out about occasionally, but you might wear it in summer. So most people probably aren't using it in the sorts of concentrations that are going to be super harmful, but they just want to have a look into it. So
Hmm. And just getting back to the business for a moment, Mickey, does the company actually have a brand that it sells, or does it license the nanotech technology for others to use in their brands?
yeah, so it sells the ingredients in a wholesale manner. So it's not selling to the consumer. It's selling to actually the formulation um, makers. And so the product is branded. It's called Zinclear, and it comes in 2 forms. It comes in either a powder form or in a solution. And the solution's mostly for smaller manufacturers who
Okay.
just want something they can easily put in, and the other is kind of a powder. But
So
yeah,
the
so
customers are actually manufacturers of sunscreen.
that's right. Yeah.
And they have
Okay.
all the brands. So
And they have
Zinclear
the right.
really, you wouldn't see it on a bottle of sunscreen.
Okay.
No, no, I guess this is one of the biggest weaknesses is if you get a competitor, and there are lots of competitors making zinc oxide, some even making nanoparticles. Just apparently that the nanoparticles they make aren't quite as good coverage, spectrum coverage, or maybe a bit more expensive to manufacture. But if they do get to the same point, I guess, where they can make a Zinclear comparable or something better than Zinclear, then there's very little, as far as I can see, for a formulation maker to not switch to another provider
Hmm.
and potentially save on money or
So do
have a
they have any patents over the manufacturing processes and things like that?
yeah, they do. Yeah, no, so
Yeah.
they came out of the University of Western Australia
Oh,
with
okay.
a with a
But
slew
but
of
the problem, but
patents.
that was back in 2005 Well, so the patents, I mean, because they only last 20 years, don't they? So
Yeah, I mean,
a few of those have got to be ready to roll off, you would think.
yeah, and I guess there's also just I guess they can make improvements and keep updating those patents, but you've also got to be able to protect them. And I guess if you've got, it's not like a brand where you can kind of protect from that risk. I mean, if you're, if someone overseas wants to make this and they don't have to abide by the same rules and they just want to copy your product, and and the the sunscreen makers don't have to put on the bottle who's made the thing going into it. So, what's to stop them from going through somebody who's just counterfeiting your product? I mean, so I guess these are just risks, but it doesn't necessarily mean it's.
Sounds very like Zuno, which we talked about last week, and which I wrote up a couple of weeks ago, in that it's potentially a great product, but possibly not so easy to protect it and to make the money from it.
Yeah, yeah, and I guess well, coming back to Gaurav's very original point as well, there's I guess a little bit of controversy around some of the management, so maybe just go through that very quickly.
Yes,
And
yes,
I think
please.
so the business was basically, I guess, got to its current form through Lev Mizakovsky, who was the founder of Tamerwood, came along and decided that he was interested in the technology, started buying lots of shares, and eventually got to a point where he, rolled the management, got rid of the board, overturned they basically fired everyone in the company and hired new people, and then decided to commercialize some of the technology. And so he's taken the share price from 10 cents to $3. So I think you need to give him a lot of credit for that. And he's also got a very good track record at Tamerwood. He started that in, I think, listed in 2000. It's done really well. So, delivered great returns for shareholders as well. So clearly a smart businessman, knows how to make money in lots of different ways. There's been a couple of things. I think he was in the news for, a motorcycle ticket. And so he crossed a white line on the road, and they gave him a $200 fine, and he's been, I think, as far as I know, in the courts for 3 years or something fighting that. And then there was an issue with, I think, Collection House as well, which is, I think, the main two things that people refer to. So he's got a habit of basically going activist in companies, and boards don't like that. And so I think he decided to sue them because they made an announcement saying that some of the claims he was making were false. So, but I think overall, you've got to hand it to him and say that he's done a great job of, building lots of businesses. He's made lots of money for lots of people, including himself. So, I think on balance, you'd probably say that he's done a pretty good job.
Why all the antagonism then, Mickey? That's what really gets me. I don't, I find that quite distracting and worrying about management that he picks fights with so many people, including the ASX, and it's not generally a good sign, particularly when is he threatening now to leave the ASX? And I mean, I just don't have patience for that sort of thing. There's so many opportunities. If you have one manager who's acting a bit crazy, I'm inclined just to put him in a corner and go look at something else.
Yeah, well, I mean, I don't want to, cast any judgment personally. I mean, yeah.
I mean, is my characteristic is that unfair, or,
Well,
or would you agree?
I don't know. I mean, because I haven't spoken to him personally,
Hmm.
so and I can see why that might give that impression. Um, but yeah, I don't know. I mean, there's, I don't know.
Yeah, I guess you got to be careful, right? Because if you'd come across Steve Jobs um, in almost any scenario except on stage, you'd think he was a crazed lunatic as well, and putting Apple in the corner would be the worst decision you could ever make.
Yeah, I guess the best you can do is just judge everything on its merits, and I think,
Mm.
um, the business seems to be in a pretty good spot, and it's got an interesting product, and management thus far have done a pretty good job of getting it to where it is. I mean, I guess all these other things can be a distraction as well, but I can't say that if I was in that position, I would have done something differently. I don't know. So.
JC, what's your live? Do you have any thoughts on this? What do you reckon?
Well, I would say that the management is probably. I mean, it's clearly a risk and a red flag and all that, but it's probably not the biggest risk with with this company. I mean, I think the problem is with the competitive advantage, the sustainable competitive advantage, and you'd have to think that if this nanoparticle zinc turns out to be the way to go, that a lot of people are going to find very good ways of making it, and they'll do so in ways that don't contravene the patents. Is my guess. I mean, you only have to do it slightly differently, and then so for me, that's the big problem. So yeah.
Yeah. I mean, the thing is, I think, as well, the thing that tears me with this company as well is you can see, so they're ramping up production at the moment and they're going after this opportunity. And right now, they're, the best in the market. And so there's potentially quite a big opportunity. So they're ramping up production to 5,000 tons, which if they get there, that's going to mean probably sales are going to be 10 times maybe what they are today in just a few years. So there is a scenario where this business is making a lot of profit very quickly, and you can see the share price going up. But then what? Is it, how long is it going to hold on to those profits? So you could almost see this as kind of a short-term trade where if it gets there, great. Then hopefully maybe you can reassess if you still want to be in the business then. But it's just one of those tricky ones where you can poke holes in it longer term, but maybe over the short term, if it does do what it's going to say it's going to do, then you can make a lot of money out of it. So,
but I mean, always the problem with these things, you've got to find someone to sell your shares to, just at the moment when when you think that things aren't going to go so well. So, and that probably will be apparent to other people by that point as well. So
no, we've got to move on to the next stock. But before we do, Mickey, just give us a quick valuation guide on this. What's it trading at now? Is there a point at which you'd be interested?
yeah, I mean, so I think the current market cap's about 200 million. And if they get to where, what they're aiming for, then they could do $40-50 million in profit. So, I mean, I don't know what multiple you'd put that on, but maybe, I don't know.
Probably more than 4 or 5.
Definitely more than 4 or 5. So,
Yeah.
so I mean, it's not so much a question of price, I think, at this point, because it's kind of, you can see the upside potential definitely at the current price. It's more just about getting comfortable with with the business and then deciding if you want to be in it or not.
So if everything works, we could be looking at a 4 or 5x.
Potentially, yeah. I mean, if everything goes really well, and then they can maybe launch some other products. So I mean, yeah. Look, I mean, there are things to like about it from here. So I don't know. Maybe we should be upgrading it. I have no idea.
Yeah. Maybe we should stop there. Let's all go and buy it. We've got to be careful with all these because I find that it's very easy to sit and make calls in businesses, and often it's not the most productive use of one's time to come up and look for ways everything can go wrong.
Yeah, I guess it's hard though, because then you just end up, you can always
Buying
make
everything.
a case for everything.
Yeah, I mean, look, it's a big market. There's 2,000 plus stocks out there, and I think you've got to be very discerning. That's so it's easy. This is the sort of stock which has a fabulous future, and you can see why it gets priced highly. But sorry, it looks like sales can grow rapidly, but the problem is that the long term position, the long term competitive advantages. And I think if you don't have those, I think you asked the question, what multiple do you put on it? Maybe 4 or 5 is too much if it's only going to earn those profits for a couple of years before competitors come in. So,
or if it turns into a commodity producer or something,
I mean, and there'll be bigger. It'll have bigger competitors that have deeper pockets and better economies of scale. And
now, speaking of big competitors, James, let's move on to one of the biggest media businesses in the world, which is Newscorp. Although the Australian listed Newscorp isn't necessarily as big as we might think it is it? The collection of assets is quite esoteric and certainly not as powerful as the American, or I guess all the news that Murdoch sold to. They sold it to another media company. I can't remember which one. But let's dig into News Corp, James. Reading a review, this actually sounded like quite a cheap stock, and yet we've elected certainly not to buy it. If anything, you sounded quite negative on the company. Just run through what you think the most important bits are and why you aren't excited by them.
Yeah, I mean, I guess I am negative on the company, but I'm quite positive on some of its businesses, and that's really the issue with News Corp. It suffers from that sort of conglomerate tag that other businesses. It sort of went out of fashion in the 90s, didn't it? All these big conglomerates owning everything.
Hmm.
I mean, at least news focuses loosely on media. And so, there is a degree of focus, and some of its businesses do sort of cross fertilize each other. Um, but the problem is that the level of disclosure is quite poor. The management hasn't been great. They've tended to plow cash into weaker businesses over the years. So you don't necessarily see the value that the value that's in the businesses doesn't necessarily come back to shareholders, and that's I suppose the problem. So what they've done recently, they're trying to correct that problem um, by splitting out the Dow Jones business, which is definitely one of its better businesses.
Hmm.
And so they had an investor day last month, a few weeks ago, yeah, last month. So, which again was rather disappointing, because out of about 120 pages of a presentation, uh, about half of them were just sort of pictures of the front page of the Wall Street Journal with a sort of fancy headline, which sort of tells you quite a lot about the business. They love their journalism, which is good. But they really, they focus on that, and sort of marketing how good we are as journalists, rather than how good we are as a business. And there wasn't really that much substance to the disclosures on Dow Jones. Not enough to really understand how well the business is going, I think.
Hmm. But the biggest stake is the REA stake. Do you think? I mean, and I was astounded to look at your valuation and see that it accounts for about $16. I assume that's just at market prices. That's amazing when the stock's trading at $19. Do you
Yeah.
think it's a? I mean, we will never. I would think you'd never get $16 in a realistic market valuation, right? I mean, that's what it says on the books, but no one will ever pay $16 a share for that stake
No,
unless
no,
they
that's
sold
right.
it.
Well. So I mean, I suppose you don't have to have them sell it. You can just let them keep it, and it can keep going up in value. I mean, REA has doubled, in the last few years. And
But
if it
the
doubles,
value
if
will
it
never be
doubles again,
reflected in
then the
Newscorp,
value
though.
of that stake's going to be well above the a Newscorp share price. So,
Hmm.
um, but if REA doubles again, then you do pretty well from buying REA shares as well.
Yes,
So
that's right.
that's really, I suppose, our argument. Um, the thing about buying news is that if you get that REA stake, and then you get a bunch of other things quite cheaply. So you get the books division, and you get Dow Jones most particularly.
And that publishing division is actually not too bad, right? I mean, they've been making decent profits over the last few years.
The book publishing,
Yes.
yeah, books is a nice business, and a few years ago when we upgraded it, actually there was a lot of talk about how books were finished in the same way as newspapers were, because everyone was on their Kindles.
Hmm.
But it turns out digital books are actually quite lucrative. You don't have to, you don't have to ship them around the country in large trucks to bookstores. So they actually make better margins, and an increasing amount of their sales has gone to digital, and they're making better margins on them. So profits bounce around a bit in book publishing because it depends on what kind of books you've got, whether you've
Hmm.
got good ones or but the profits have been pretty solid and even rising a little bit. So yeah, that's an attractive business, although not, I think, as attractive as Dow Jones.
I think well, I think one of the things I noticed while just reading your article, James, is it seemed like you're being pretty modest in some parts of the valuation as well. Like it seemed like you could have probably gotten a few more dollars in there if you pushed for it. Like for example, there was I think the New York Times comparison,
Mm.
um, which was trading on quite a high multiple. So what's the difference there in terms of those two businesses, and like why wouldn't you?
Well, that's the difficult thing, isn't it? Do you take other businesses and just apply. That's the market valuation of the New York Times, and possibly it's an overvaluation. So how much do you take that and just apply it directly to your valuation of another company?
Would that add a
I'm
lot of
always
value though
I'm always nervous of peer comparisons for that reason. But does it? I mean, I suppose the difference they've both done similar things, and they both have similar advantages. So I think where they are better than things like the Australian here and the Sunday Times in the UK, i.e., News is other poor old media business. Where they have advantages that they solve specific problems. So people use the New York Times and they use the Wall Street Journal because they think it's going to help them with investing and making money, and people around the world use it as a great source of information for that. So I think it has that trust, it has that quality, and
Whereas
so they both. I beg your pardon?
news is just kind of becoming a commodity, isn't it, to some degree?
Well, to some degree, but I think people still value, because there's so much rubbish out there. People are actually gravitating towards the higher quality titles, and so that's something that News, actually, Robert Thompson, the chief executive, has been fighting for over the years, and I think he's finally beginning to get people to pay for that, and for getting online outlets, your Googles and people to sort of pay for it.
There's no doubt that's true. The numbers out of New York Times, Wall Street Journal, and The Economist is the other one that's doing really good subscription numbers.
And the FT as well.
And the FT, yes, that's what. Yeah, agreed.
So they and what both have done is they've really focused on. Well, they focus on two things. They've invested in the business. So New York Times particularly has pared itself back to just really the title. And it's invested heavily in its journalism. It's backed itself, and the Wall Street Journal has done this as well. And it's also invested heavily in its online digital marketing, so that it's become much better at converting people from going along and reading the odd article, and then Wall Street Journal has something it calls the dynamic paywall. Now, I don't quite understand how this works, but the idea is that it has artificial intelligence where it understands whereabouts you are, how likely you are to subscribe at a certain point, and it sort of gives you free articles to sort of fit that profile. So different people get different experiences, and the conversion is much better. And New York Times has been doing clever things around that as well. They've got a lot of money to spend on that, and so they've made that investment. They've made the investment in the media, the content they provide, and also in their ability to convert people. And I mean, Wall Street Journal's been raising prices. It's been raising prices. It's been this is online, and it's been increasing digital subscriptions. And they both look like they're doing very well. The difference is, I suppose, that so Wall Street Journal charges twice the price of New York Times. So I think New York Times has a little bit of latent pricing power, and I think the growth in New York Times is looking a little bit better as well. So it's funny. You only need to be going a little bit more quickly to make a much higher multiple appropriate. And so I think that's, so when you look at it, so their multiple, EBITDA multiple, about 26, and I'm talking about 12 for Dow Jones, which is pretty, look, I think I said in the article, I mean, you could argue for more, you could argue for 15, and that would add another $1 really to News's valuation, but I chose not to, because I don't think the disclosure really is there to support that at the moment. But any which way, you're saying that New York Times is worth about double the multiple. Well, if it brought its prices into line with Wall Street Journal, maybe it'd be making double the profit. So, I think there are good reasons why that multiple is a bit higher.
Now, there's an argument to be made that there's potentially $30 worth of value in Newscorp, and it's currently trading under 20, and you seem very reluctant to want to own it, James. Can you go into the reasons for that?
Well, yeah, I've I first upgraded. I think it was 2013, was it, that I first upgraded it at about $20. Maybe it was 17, giving myself a bit of
And the
leeway.
arguments
But
then were
but it
very
was
similar as they are now,
yeah,
right?
they're exactly the same now.
Yeah.
And I made the mistake then of overvaluing Foxtel. We knew that it was compromised. We put low
Mm.
multiples on it, but really any multiple was it should have had a multiple of zero, really. So
Mm.
so that's been a negative, and really REA Group has come in to fill the gap there. But it's just been frustrating, and perhaps now is the time. But it's this conglomerate discount which we didn't really put enough of a discount on it, I think, to reflect. It's burnt a lot of money over the years in various ventures, and if you buy the best bits, particularly REA Group, of course, that's the only bit you can really buy separately. Then you don't have to suffer that. So
Mm.
um, I'm just reluctant um, to get into it. I think it does deserve a bit of a discount. So when you look at the sort of when you say it's a $30 price, you've rounded that up. I mean, it's
Yeah, I've rounded that up.
28.50, and that includes a full market valuation for REA.
Mm.
So that takes that $115 market price as read.
Mm.
So then you've got to leave a little bit. You don't want to buy something, own something that's overvalued. And I think it is right to knock 10 or 20% off as a conglomerate discount. So that does get you to our $25 sell price.
Mm.
The question is, so we've got a buy price way down at $15, which probably does look a little bit harsh. You'd probably buy it a little bit higher than that, but I think if we get down there, we'll review that. But for the moment, I'm reluctant to give a lot of credit. I think that people, if they want to buy REA, I think that it's a much better bet to just do that. Although our buy price, I should stress, for REA is $90, so we're a little bit above that.
Mm. It's quite telling that over the course of that 6 or 7 years since we've been since the first time we upgraded Newscorp, you would have done much better just buying REA. And I think there's
Well,
an
REA
element
is
of
pretty much it's more than tripled. So
yeah.
the stake, Newscorp stake, it's in the second paragraph. I'm looking at it now, 2.5 billion to 9.3 billion. It's gone. So
Mm.
it's almost quadrupled.
Well, and
And
also the complexity as well, and the time spent, getting to know so many different businesses and having to cover them all and everything. It's just,
I think that's actually not to be underestimated as a private investor, but also as someone who has to write articles about it. It takes up a huge amount of time, and
mm.
you're never able really to fully understand every little last bit of
Well,
news.
and what's that Warren Buffett saying? He's like, if you have to watch something really closely, you shouldn't own it. It's just takes
Yeah,
up so much time
yeah.
and energy and effort. And
And funnily enough, REA is probably the most straightforward business in there, and so that tells you something, doesn't it? I mean, all the rest of it, it's pretty hard to fathom.
My other problem
And
with it just seems very obvious. I mean, there's no real hidden value here. I mean, we're not being particularly clever by totting up all the pieces and finding a discount. Everyone
no,
knows
people have
that.
been talking about this
Yeah.
for years.
Yeah.
UBS, the broker, produces a sort of weekly note saying what the stub assets, they call it, are worth, i.e., the
Mm.
non-REA assets are worth, and they send that around to all the fund managers, and still no one seems to want to buy it. So, which does tell you something.
Yeah. Yeah. I think that's right. Being cheap for me also, there's a bit of a style element here. I no longer wish to hold cheap but lousy assets, which I have done in the past. And apart from REA, yes, I take your point about Wall Street Journal as well, James. I think it's well made,
Well,
and
it's
I
not
think
just Wall Street Journal. Sorry, you make your point. Yeah,
yeah, no, and I understand. Sorry,
yeah,
about
yeah,
that division. Yes, there's
yeah,
an information service attached to it as
yeah,
well, which is
yeah,
is quite valuable. Yeah, I think
yeah,
that's fair, and I think in the original analysis we potentially undercooked that whole division,
yeah.
and I did notice you corrected that, so I think that's a worthy update as well. But even with all that, I would just rather buy REA than buy News Corp. But there's a whole bunch of companies I'd rather buy ahead of buying News Corp, and it being a little cheap isn't enough to dissuade me.
Yeah, I think that's right. I think that given
well,
if
we've
you've
only
got
got a hold on it though as well, so it's not a not a
Yeah,
buy.
no, but that's right.
Yeah,
That's right. So at
that's
$20,
right.
we're a hold. And I think, look, if Dow Jones is worth a bit more, then you possibly do get to your $30.
Hmm.
But $30, I think, is then a pretty decent valuation for it, taking as read the REA market value.
Hmm.
And so, if that's your value for it, do you really want to push owning it beyond $25 much?
Hmm.
So and at the current price of $20, what's there to, there's not that much to go for. I mean, I suppose you could say there's 33% upside, but that's if you get all the way to what you perceive as its value. And I think some discount is appropriate.
Hmm. It's also worth noting that if Murdoch was to leave the business, or if management were to change, then that would completely change everything. Because then you have a breakup candidate, and I'd be more interested in it then at
Well,
that point.
that's right, but that's another point, I suppose, at why you have the conglomerate discount. Because if it did start breaking itself up,
Hmm.
look, I'm no expert in U.S. tax law, but there are complications
Hmm.
around how that happens and about the tax that has to be paid. Um, you'd think there's a big capital gain on that stake in the REA Group. So that's where this conglomerate discount has real implications.
Hmm. Yep. All right. So it's cheap, but it's not going to be on the buy list at anytime soon anyway. Hey, James?
Well, who knows? I mean, it only has to fall 25%. But I mean, look, maybe we're being a bit cautious about that, but it
Hmm.
takes up a lot of time, and over the years, that's not been time very well spent.
Yeah. I can't say we've all been raising our hands to want to cover it. That's for sure.
Yeah.
There's businesses that kind of everyone wants to fight to cover, and there's companies that no one wants to touch.
But
And
maybe that's the opportunity. That's I look. We'll keep covering it because it is a live recommendation. We have said buy,
yep.
and we are saying hold, and we think it's certainly worth holding. There's plenty of value there.
Yep.
So we will keep covering it, and possibly, who knows, there'll be an opportunity. I think we've got to be alive to that.
Let's move on now to Aussie Broadband, which I introduced last week. Now, I first came to this because several people, independent of each other, and in fact, Mickey was one of them, mentioned to me that this ISP, internet service provider, was listing, and at first I had no interest. I thought, this is actually a lousy industry. Very few people make money here. And the best of them, TPG and Telstra, have been complaining about low margins and low profits. So why would I buy this tiny business I'd never heard of, whose sole service is to connect NBN customers? I just was not interested at all. But the some smart people actually said to me that this is actually a really good operator. The management's incredible. You should at least give it a look. And so as I went through the prospectus and started talking to people, I realized that this is actually a fantastically managed business that may not look wonderful today, but it's beloved by its customers, and it's got a definite plan to improving and growing in the future. And I think those are the kind of investments that can look interesting. That when you do have an incentivized and talented management that have a plan for growing the business, and it reminds me a little bit of TPG. Way back when we first looked at that, I think before it even bought Pipe, it was just a clear reseller. It didn't have anything of interest to add as an investor. There's nothing you could point to about TPG and said, well, it does this better, or this is interesting for this reason. All it had was management with hustle and customers who really liked the low prices. And I see the same kind of hustle with Aussie Broadband, and I see the same kind of loyalty, even more so with its customers. And I think that can be quite a powerful combination. And that's why I'm quite interested in this company, even though it's an IPO when we don't traditionally cover IPOs.
Do you know there's a big difference though, I think,
Yeah,
between TPG, and you sort of got to it there, which between TPG and Aussie Broadband, which is that TPG is all about price, isn't it? And always
yeah,
has been.
always has been. Yep.
And so, look, it's done a great job with that, and perhaps understood about that price thing a bit before other people did. But Aussie Broadband's completely at the other end of the spectrum and has
Yeah.
understood that people are prepared to pay a bit more for a really, really good service.
Yeah.
And competing by providing a really, really good service, if you're good at it, gives you a bit more in the way of competitive advantage, doesn't it, than competing on just cost. I think cost is a bit of an easier. Well, the bigger players have more advantages, and it's hard to compete with the likes of Telstra, although TPG's obviously managed it. But Aussie Broadband competing on service, the others, I think, are all leaving quite a bit on the table
Yeah,
in
well, I
terms of
think it's
service.
hard to do both well. I mean, to give TPG its due, it has taken an extraordinary company culture and a really focused strategy. The TPG has been a success because it has collected customers cheaply and effectively and then moved those customers onto scalable infrastructure that it has owned. And it's taken its time and spent money on building its own infrastructure. Didn't have that early on. Um, in fact, Aussie is going down the same road now. The reason for the IPO is to raise money to build a fiber network that will connect capital cities to data centers. And those traffic routes are currently leased. They, in fact, take up about 75% of Aussie's revenue. And so it's hard to scale because you're constantly, for every additional customer, you then have to pay 75% of the revenue onto lease costs to move the traffic or internet traffic around. But it can replace that to some extent and use its own network. It can scale better and it can control traffic and provide a better quality service further down the line as well. So it's not an untrodden path. It's quite a good strategy.
I wonder as well, like, because they've done a great job going from 1% to 3% market share. I think it was three and a
Yeah,
half
three and a
percent.
half. Yeah,
Um, so I think something we talked about when we had the discussions about it was, how hard it would be to go from 1 to 3% compared to 3 to say 10% or something. So, I mean, it'd be interesting to see what you think, like, about how big it can get, and what kind of market share naturally there is for kind of this premium end product, I
hmm.
guess.
Yeah. I actually think it's really hard to replicate what they've done because the company has no discernible advantage. There are 190 competitors providing broadband. Telstra and TPG have, and to some extent Optus, have scale advantages. They have marketing advantages, they have brand advantages, and they have bundling advantages. And those are all quite powerful. And the other, 187 competitors have none of those, and they all use the same network. So everyone is leasing capacity from NBN. Everyone is leasing backhaul to get to the NBN. So the fact that Aussie managed to leapfrog everyone and become the number five player is extraordinary. I think that is the hardest move to make. Once you've become number five, you're actually generating cash flow. You can reinvest in marketing, and you can do what these guys are now doing, which is getting capital and start the next phase, which is building out your own infrastructure. And once you have that, then you can actually generate some proper advantage. And then you can, I think it will be easier then to go from 3 to say 7. I think to get beyond 10 would take a bit more work, but I think the next leg of growth ought to be actually easier than the first leg.
Yeah, I think because you get economies of scale, don't you? I mean, there's a degree of fixed cost,
Yes, that's right.
and marketing well. I mean, obviously they'll increase it as they get bigger, but there's a it's relatively, you get more bang for your buck as
Correct.
you get bigger, and as the name gets out there and more people are aware of it, it starts to sell itself.
Yep, that's right.
So I think I probably agree with that, but then I also agree with Mickey's point that it's a little bit of an unknown about how big the market is for that premium
Mm,
service. Whether 10% of people really want to pay a bit extra for a really, really good service. I mean, and the really good service, what that means basically, I think, isn't it? Where just when you have a problem, you call up or you text or you go on the app or you contact someone in some way, and it gets fixed a lot more easily. Does it? That's
Well,
basically the difference, is it?
no, there are a couple elements there. So the way the NBN works is that the retailers have to. It's a lot like the electricity market. retailers have to go out and purchase bandwidth, and they have to do that upfront, and then they have to manage the bandwidth. So consistently going back to the market and buying more or relinquishing some. They have to manage the bandwidth for every customer.
So the
And
speed is more consistent. Is that
exactly, yeah. So the amount of money you're willing to spend up front will largely determine your speed experience. So a lot of the complaints about the NBN, and I've been loud in my complaints as well.
It's the Sunday night Netflix problem.
Well, yes. Some of them are due to the lousy infrastructure that the NBN has been forced to build. And some of them are due to the poor pricing structure, which forces retailers to make upfront payments to service customers effectively. And if they don't buy the right capacity, if they don't have redundancy in their leasing network, so there's several international cables you can lease. If you lease one that happens to be congested, you're going to get slowed down. Aussie Broadband actually leases on multiple cables to build redundancy. That all actually costs money. It takes working capital and it lowers margin unless you recapture it at the retail price. And that's what Aussie has managed to do. They've done very well in purchasing adequate and perhaps above adequate bandwidth. They've created software to manage the bandwidth arguably better than anyone else. TPG also does this very well, by the way, but lots of people don't. They manage that bandwidth for each customer, and then they charge for it at the end, which TPG does not do, but they do, and that creates a better customer experience.
So they
It's
have
the
higher.
speed and reliability.
So
Yeah.
they have higher ARPU, revenue per user.
Correct.
But at the moment, the higher costs mean that their margin is much lower than other providers. But hopefully, as they get bigger, so they need to get bigger in order for that margin to get up. Is that
Yeah.
right?
Well, they're currently
Because
making
they
a
need to
loss.
build. So they're currently making a loss, right? But
Yeah.
they're making an EBIT margin, aren't they? Oh no, you're looking at 2025.
Yeah,
When will they get profitable? Do you think? When do they reach like break
Well,
even?
this year they should make a notional EBITDA margin, but I would caution that EBITDA, because they need to amortize their lease agreements, it's not the best way to think about this business. And EBIT profit will it's probably a couple of years out, still maybe 2 years out. And the infrastructure part of the business would really help that, because it will then allow the company to actually generate operating leverage, scale. And only then can you generate proper margins, really. Otherwise, you're always going to be subscale.
But we're
So
talking about them needing 4 or 5% market
like,
share, are we, in order to make any kind of EBIT profit?
Yeah, I think that's right. I think
what if
that's right.
yeah.
because I noticed that they did a deal with Opticom to
Yep.
provide their broadband in their networks. And one of the interesting things I thought about that at the time was that Optus and Telstra refused to go into Opticom's network. So
Yep.
I guess Aussie brand broadband, but Opticom's already got all this fiber in the ground. So I mean, could that? And you're seeing a lot of M&A in that space. So
Yep.
that could be like a natural purchase or something. You could even see something like that happening, maybe potentially.
Yeah, I'm sure there's lots of transactions to be done here. There's a lot of competitors, and some sort of integration makes sense. The reason why Optus and Telstra refuse to service those areas is really because they're too high cost. Their cost to serve are too high, and they can't make a margin on pure reselling. You really have to be a bit more nimble to be able to do that. And I think Aussie does actually make margin on those reselling agreements, where some of the larger guys do not.
But the Opticom, the fiber that Opticom owns, forgive me if I'm wrong, but is more the last mile sort of fiber. Is that right? Whereas what Aussie Broadband is trying to build and what will really benefit its margins is the backhaul.
Correct.
Connections between
That's right.
cities. Is that right?
Sure.
Well, you can't actually, because the NBN is a regulated monopoly. You can't actually. There are. It gets complicated. There are some exceptions to that, but generally, you can't compete with NBN. There are exceptions, and TPG in particular has done well to do it. Telstra has done well to do it, but you need specific specific reasons in place to be able to compete with the NBN.
But I
Specific
guess
conditions.
the thing, the only thing I guess I was trying to make was just that, is there a point of these guys actually going out building their whole network, or would they just plug into someone else that already
Yeah,
has that network,
yeah.
and then it just
They will plug into someone else, but they have to get traffic to that other network, and that's what backhaul is. So at the
Yeah.
moment, they lease dark fiber from Vocus, primarily to access the NBN and to access Opticom.
Mm.
But by building their own, they can cut all those leasing costs out, and it allows you to also better manage your traffic as well. One way these guys have been really good is just by harnessing control of every part of the experience. So they've actually built their own billing system, their own customer customer management system, and as I said, their own NBN control monitoring system. And they've done that over years, and it appears to be better than any of the competitors because the survey results, the awards, the customer retention, all suggest that this is well loved by customers. And the fact that customers are clamoring to buy in the IPO, I think it was oversubscribed by multiples.
A lot.
A lot, yeah. And actually, the offer closed early, and by all accounts, it was very hard to get any stock. I think that all speaks quite positively about how the way the business has been performing. I do like where it's headed as well. I mean, the management has talked about things like they've built an enterprise portal, so they've never had any enterprise sales, but they're now building a sales team and a portal to generate enterprise sales. That's going to be quite valuable. And they might be able to do some bundling later on by entering mobile. And bundling really helps with your retention rates. So there's lots more optionality further down the line. The IPO price is super attractive. I do not expect on day one we'll get anywhere near that. It's probably going to jump 30% plus on day one. And even then, if we can pick this up around $1.30, I'd be reasonably happy to pay that. I've put some numbers in the article, that you can go ahead and have a look at that. But really, what this idea is about is identifying a company, a management with real entrepreneurial flair, with a great track record, and with every incentive in the world to do well. One of the best things about the IPO is that not a single insider is selling any stock, and I don't think I've seen that very often at all. They're all retaining every share they have. So this is not an opportunity for them to cash out. They're raising capital for a legitimate purpose.
I guess you never know. I mean, they could sell in a year or something.
Correct.
But
Yeah. There's no agreements. There's no lockup
yeah.
agreements or anything. But
At least they're not selling into the thing now. That's good.
Yeah,
Hopefully they're buying shares once it comes out.
Yeah. Well, they already own millions of dollars worth of stock. So, and I don't expect to be buying more. But yeah, it's most
I suppose.
IPOs just waits for the insiders to cash out, and this is not that.
No.
I suppose the point is that the price that they're raising the money at $1, as you say, it's very attractive. So they'd actually get more by selling on market.
Well, that's what I'm thinking is maybe are they waiting for the price to go up, and maybe then they'll look.
But I don't think you'd begrudge them it. I mean,
no.
I think people are allowed to recover a bit of their investment. They've built a fabulous business, and if they want to buy a nice house out of it, then who'd begrudge them that?
Yeah, no, I agree. They're modestly paid as well, so most of their wealth is actually tied up in the business. I think that that speaks well as well. I've heard the MD talk, and he has the same kind of obsession with the company and its quality as great founders tend to. So it's one that I'm going to try and I'd love to be able to upgrade, actually, depending on the price. I have to get through you guys as well. Because,
look, I think we all like it. I think we're just let's wait and see what the price is when it lists, because that's going to be the sticking point, I think.
So rest assured, on listing day, I'll have an update. So list on the 27th of October, I'll update it, and the recommendation will really just depend on where the price lands. I'm expecting, and everyone should expect, a very large jump on day one. Right, gents, it's been a very long podcast. I feel as though this whole podcasting in isolation is taking its toll. We're in multiple locations. We haven't really met up in a while.
It's easy to ramble on, that's for sure.
I know, right? It's easy to ramble on. Yeah. So we'll try and tighten it up next time, maybe. All right, gents. Mickey, thank you very much for your time.
Thanks, Gaurav.
JC, good of you to join us.
Cheers, Gaurav.
And for everyone else, thank you for listening.